Hello everyone, and welcome to today's webinar, 2021 COVID-19 Recovery Check, Emerging from the Crisis. My name is Radina Koleva. I'm macroeconomic researcher at ISI Emerging Markets Group and will be the moderator today. Thanks to all of you for joining. I'm really glad to see attendees from many different countries. Before we get started, to some of you who are not familiar with what we do at ISI Emerging Markets Group, we have been in the business of providing information on emerging markets for over 25 years. We have two brands, CIC and EMIS, which specialize in providing high-quality emerging markets content. CIC data provides macroeconomic data on more than 200 economies, while EMIS focuses on providing company, industry, and country research on emerging economies. Well, I would now like to introduce our panelists today. Xing Tong, or Olivia Wu, is CIC's macroeconomic researcher based in Shanghai. She comes from a policy background with 3 years of experience facilitating and regulating China's foreign direct investment and outward direct investment before joining CIC. She holds a master's degree in international affairs and has specialized in international finance and economic policy at Columbia University. Rohini Sanyal has been working with ISI for covering India since 2019, apologies. She graduated with a master's in economics from the University of Warwick in the UK and has 5 years of experience with well-known research institutes in India, like the National Council of Applied Economic Research and the Indian Council for Research on International Economic Relations. She has also worked for the management consultancy Bain & Company. Adriano Moraes is research economist at ISI Emerging Markets Group. He plays a crucial role in our industry and macroeconomic analysis for Brazil. He previously worked as an economic specialist at the Federation of Industries of the state of Sao Paulo, covering public policies in the manufacturing. Further on, he holds a doctoral degree in economics at the University of Sao Paulo. Before we start, I would like to mention just a couple of points that will help us interact during the session. First, you have the opportunity to ask questions. All attendees are on mute, but you can submit your questions in writing using the panel on your right. We will make sure to answer as many as possible during our Q&A session. And second, we have also a handout section. It is just above the question panel. And over there, we have uploaded our presentation. Before handing over to our panelists to talk in detail on China, India, and Brazil, I would like to make just a brief overview. Last year in August 2020, we published a thematic report as the world was still in the midst of the pandemic. And this report was focused on policy responses to COVID-19 in major emerging markets. In the beginning of 2021, as the vaccinations campaigns across the globe are gaining speed, we thought that it's a really good time to make a recap. Obviously, governments and businesses are hopeful that indeed the vaccinations are going to be the game changer this year and actually propel the recovery. On this slide, you can see data on selected economies, both developed and emerging, and the different indicators reflecting the vaccination process. And the figures vary a lot, as you can see. It's important to point out that here we are talking about vaccinated people. Further data sets include indicators such as total vaccinations, daily vaccinations, different ratios, etc. At ISI, we really do our best to keep track of this high-frequency data in order to provide in-depth analysis and valuable content for each region and industry. Since recovery is hopefully going to be the key word in 2021, let's take a look at some data and forecasts on GDP. On the chart, we have highlighted the GDP dynamic in the focus markets today, China, India, and Brazil. The Q4 data for India and Brazil is yet to be released, but it is evident on this chart that China stands out with positive changes in 3 out of 4 quarters last year. This is not the case definitely for many developed and emerging markets, as you can see from the table below the chart. And on the right are the Focus Economics forecasts for the annual GDP growth rates in selected markets. So we can see 2021 is probably going to be a year of robust recovery, with India leading the way. And the following year, 2022, this rebound is expected to cool down. COVID-19 deeply affected the way we move around, to go to work, to go shopping, to do business. Here are 2 heat maps visualizing the mobility trends at workplaces on the one hand and at retail and recreation venues on the other. Each square reflects the monthly average change compared to a baseline period from mid-January to mid-February 2020, right before the social distancing measures in multiple countries got implemented. So basically the darker red means a lot less movement of people, while the green color means that movement patterns were very close to the pre-pandemic baseline. And the interesting thing here about the workplace's mobility is the fact that even during the summer months, as many restrictions got relaxed, many people were still working from home. So in that regard, it is fair to say that home office is here to stay, at least for the businesses for which employee location isn't crucial. And this development is going to have implications on various industries. For instance, real estate, property rentals, anything connected to office maintenance, transportation as well. Now, mobility at retail and recreation venues, on the other hand, tells a different story. We saw more pronounced recovery in the summer of 2020, and then again going back to the orange and red territory in the autumn. We observe outliers as well. We see Hong Kong, where restrictions were put in place in August. In Germany, for instance, where the federal government imposed several rounds of lockdowns, as far as I remember, as early as November 2020. We can also see South Korea, which was actually largely praised for the initial containment of the outbreak, but it saw spikes in cases in December 2020, which resulted, of course, in restrictions on movement. Speaking of policy response, 1 year into the pandemic, the governments maintain their active role in supporting the economies. And this is evident from the large fiscal packages that have been implemented, some of them amounting to over 10% of GDP, like in the US and Japan, among the examples that we have given here. The government response indices on the charts on the right illustrate how important the government's role proved to be for the economic recovery. Of course, this comes at the cost of high budget deficits and higher debt. And while the gaps in the budgets are probably going to narrow down in the current year, the debt pile will grow further before starting to decline in 2022. And with that said, I'm happy to hand over to Olivia right now, who is going to tell us a bit more in detail about the recovery in China.
Thanks, Rodina. As the only major economy to register positive growth in 2020, China's 6.5% GDP growth rate in the last quarter of 2020, as well as the 2.3% growth rate for the whole year, are definitely encouraging numbers. Effective COVID-19 containment measures, such as large-scale contact tracing and virus testing, enable the economy to largely be on a normal track, despite several rounds of regional outbreaks across the nation. Public investment and infrastructure spending fueled the recovery. China's industrial sector showed remarkable resilience, with the supply chain quickly resumed after the disruption. Strong exports also powered the recovery. However, a deeper look at the economic data revealed the unevenness of the rebound. While China's industrial output quickly rebounded since April and posted around 7% year-on-year expansion rate since September, consumption spending lags behind. On the one hand, unlike what we have been seeing in some advanced economies such as the United States, where the COVID-19 relief funding goes directly into consumers' pocket, the fiscal stimulus package in China did not directly compensate the consumers. On the other hand, households in China are still holding back on discretionary purchases due to the uncertainties of the future. Thus, we see from the graph that the year-on-year growth rate of retail sales of consumer goods did not turn into positive until August 2020. Even though December 2020's reading was 4.6%, a big improvement compared to August, it's still significantly lower than the pre-pandemic level of 8% year-on-year growth rate. The weak consumption level can be cross-checked by consumer price index. Core inflation, excluding food and energy prices, stayed below 1% year-on-year change since June 2020 and reached a historical low record of 0.3% year-on-year in the beginning of 2021. Non-food CPI barely changed since July 2020 until it registered a 0.8% decline in January this year. Meanwhile, the surge in online shopping proved just to be a shift from physical stores to online stores rather than a rise in the overall consumption. Throughout 2020, China's consumption level declined. It accounted for 54.3% of China's GDP by the end of 2020, 3.5 percentage points lower than that of 2019. Thus, due to the lagging consumption, the demand side of the economy took much longer time to pick up, with most products experiencing producer price deflation throughout 2020, food being the only exception. Manufactured goods recorded narrowing price deflation since May 2020 and finally turned into inflation in the beginning of 2021. The prices for raw materials have also been gradually recovered since May last year. However, we can tell from the heat map that price deflation for consumer durables and clothing, which are more directly associated with consumption, still did not observe significant improvement. Another challenge for the recovery is the continued pressure on small enterprises, as shown on the manufacturing PMI chart. Large enterprises are on a strong recovery track with PMI data reaching as high as 53. Medium enterprises experience some ups and downs, but those small enterprises recorded below 50 benchmark reading for the majority of months since the height of the pandemic, revealing the huge pressure on those businesses. In fact, a big portion of large enterprises are more involved in infrastructure building programs that are supported or sponsored by the government. Relatively speaking, small enterprises are more vulnerable to the weak consumption level. The uneven recovery of the Chinese economy will continue to bring challenges and risks heading into 2021.
Thanks a lot, Olivia. We'll definitely keep monitoring the indicators for China and keep an eye on the recovery and how even or not it is. With that, I would be happy to hand over to Rohini, who will tell us in detail about the recovery in India.
Thank you, Radina. So as many of you already know, that India's slowdown had started much prior to the pandemic. In fact, if you see the graph in Q4 of 2019, and I'm referring to the calendar year here, growth had decelerated to 4.1% year-on-year, which was one of the slowest amongst the emerging markets. And this was led primarily by a slowdown in consumer demand, investment, and export. Now, the economy currently stands in technical recession, thanks to the 2 consecutive output contractions that we've had of 23.9% and 7.5% in Q2 and Q3 of 2020, respectively. In fact, India suffered the sharpest decline in output in Q2 as compared to other emerging markets. that happened because of the stringent lockdown between end March and early May. However, the recovery from Q2 to Q3 was quite significant. So from 23.9 to 7.5% declines. And now Q4 is expected to see a growth. The RBI has now casted this value to be 0.1%, but we have 3 more days to go to see what the number turns out to be. Now, in fact, India is envisaged to become one of the fastest growing economy, the fastest growing economy for both 2021 and 2022, according to consensus forecasts, as my colleague Radina also mentioned. To achieve this feat, now we need to reflect on the core issues that India has been facing. That is a subdued consumer demand and investment. While the lockdown required short-term cash transfers for sustenance for those living marginally, there were several medium-term and long-term reforms that were introduced at the time of the fiscal stimulus, such as perks to companies and greater capital expenditure. The idea was to generate more livelihoods and thereby generate consumer demand. The budget announcement for fiscal year 2022 also reinforced this idea by initiating the focus on development of human capital through better health, education, and skill. Now, all these measures in conjunction would help address the issue at the root. Now, coming to the healthcare sector, India's healthcare sector, as the pandemic revealed, had not been in the best shape. India lags substantially behind other members of the BRICS in terms of health systems, ranking amongst the lowest in number of healthcare professionals and hospital beds. The Indian government has recognized this and has proposed to increase healthcare spending in fiscal year 2022 by 137%, which is one of the largest that has been in the past many years. The pandemic has encouraged the adoption of new technologies such as apps for contact tracing and live logs of available beds and ventilators. The state governments are also now regulating private hospitals to enhance, the public healthcare infrastructure. In January 2021, India joined the ranks of other countries administrating vaccines, and since then, about 11 million people have already been vaccinated in India. This vaccination drive will prove crucial not only for the restoration of normalcy, but in controlling a second wave that is currently sweeping other parts of the world. Even as the threat of the mutant strains of SARS-CoV-2 virus loom, the lightning-fast vaccine development has renewed the hope of controlling the virus to a great extent. India has had a bit of mixed signals about the economy from high-frequency indicators. On the one hand, industrial output has recovered, but on the other hand, consumer demand is still in a bit of a volatile state. The overall turnaround in GDP can be attributed to the responsive action that was taken by government and the central bank. The inflation targeting monetary policy of the RBI has been beneficial in navigating this crisis and providing room to the government to pursue an expansionary fiscal policy that does not lead to inflation. The policy rate has been kept unchanged since May 2020, despite high headline inflation. The RBI has also ensured ample liquidity in the financial markets to help businesses in reducing losses. Such actions have paid off in the third quarter when we saw that substantial improvement. And now that inflation has come down within RBI's target range, it is safe to assume that India is now nearing the normalcy. However, the key question that remains here is whether India will be able to continue this pace of recovery. Many indicators are suggesting a moderation in growth and reviving consumer demand that will be crucial in keeping up the pace of recovery. Considering that the government's aim was to create and increase jobs, and if we look at the EPFO data, the Employees Provident Fund data, shows a 200% increase year on year in the net payroll for the month of October. But the new subscribers, again, they've declined in January. So there's a possibility that jobs are now being given contractually to avoid permanent hires in these uncertain times. There's also a risk that growth may be led by a few big firms as opposed to being led by purchasing power of people, recovering the consumer demand. Now, that puts the economy at a risk of unsustainable growth, which will not progress over long term. Now that India is in the leagues to is forecasted to be the fastest growing economy, we really must reconsider everything at the end, both from the government and the RBI, to see how the policies work together.
Thank you, Rohini. Before handing over to Adriano, I would just like to quickly remind our audience that you can submit questions using the question panel on your right. And at the end, we have a Q&A session where we can address those. Now to Adriano in Sao Paulo, telling us a bit more about Brazil.
Thank you, Radina. Hi, everyone. The pace of vaccination is a crucial element for the recovery in Brazil. Brazil started the vaccination plan with some delay, as the government has had some difficulties to acquire a large quantity of vaccines. Brazil planned to vaccinate all of its population until December 2021, so probably the effects of the pandemic will last until the end of the year in Brazil, affecting mainly the labor market. The services sector is the biggest employer in the country, and the services sector was highly impacted by the pandemic, as many key segments are face-to-face activities in the sector, like restaurants, hotels, hairdressers, personal care, and etc. It's curious because in Brazil, the main statistical surveys separate the services sector from the retail of goods. And the retail of goods and the manufacturing in Brazil had a very fast recovery to the pandemic. And the agriculture was almost unchanged because of the fast recovery of the Chinese demand, as the agriculture in Brazil is driven by the foreign demand. Moreover, the construction sector is also amid a real estate boom. So these segments driven by the demand were boosted by the Emergency Aid Program, a cash transfer program from the federal government, which lasted from April to December 2020. In addition, the central bank also cut the key interest rate to a record low of 2% in August 2020 and left this rate unchanged since then. So Brazil also saw an unequal recovery in the end of 2020, hampered by the impact of the COVID on the services sector. In the beginning of 2021, the country cannot count with the emergency aid, which ended in December 2020. Next slide, please. Thank you. Moreover, Brazilians saw another difficulty in the end of 2020. The country saw an increase in the inflation in the second half of the year, reflecting higher food prices in the country. It happened because the exchange rate depreciated during the coronavirus pandemic, pushing up costs of farmers and stimulating many of them to export and reduce the domestic supply of food. The rising inflation and the end of the emergency aid in December 2020 also had a negative impact in the poverty rate of Brazil, which jumped to 12.8% in January 2021 compared to 8.5% in December 2020. There is another potential risk related to the rising inflation. That is the expectation that the benchmark interest rate, the Selic, may increase. Brazil follows the regime of inflation targeting. So when inflation increases, the central bank usually increases interest rates to control inflation. And there's another risk that may lead the central bank to increase interest rates, the fiscal risks. In some statements, the central bank shows some concern with the fiscal risk of the country, saying that interest rates can rise following a significant increase in the fiscal risks. But in this scenario, this federal government intends to resume the emergency aid program between March and May in a smaller version than the one implemented in 9 months of 2020. The 2020 version of the emergency aid costed to the federal government around 300 billion of Brazilian reais. This new version is expected to cost 30 billion of Brazilian reais. But now, the public finance is now in a much more critical situation than in 1 year earlier. For example, the public debt ended 2020 around 89% of the GDP. 1 year before, it was 74% of the GDP. So it's a very critical fiscal situation in the country. But the government has a strategy to implement the emergency aid. The government will offer the Congress the emergency aid, this new version of the emergency aid, in exchange that the Congress will authorize the federal government to control some expenditures. For example, to freeze the civil servant salaries and banning new hires for up to 2 years in exchange for the new version of the emergency aid. This will provide some relief to the public finance in the medium run, in spite of increasing some expenditures in the short run. The federal government also aims to approve some economic reforms in this period to help the public finance to be more sustainable in the long run. For example, some of these reforms are the public administration reform, the tax reform, and some privatizations also. So in this scenario, the financial markets expect that the Selic rate will increase from 2% to 3.75% in the end of the year, and probably it will stabilize the inflation rate at 3.6% in the end of the year. And for 2021, the expectation for the GDP growth will be 3.4%. It's less than the fall of 4.4% estimated for 2020. So probably the Brazilian economy, the Brazilian GDP will recover in 2022, when it will grow, it's expected to grow by 2.5%. So this is the scenario for Brazil, and it's over to you, Radina. Thank you.
Thanks, Adriano. Really interesting overviews from all of you. I would like to now elaborate a bit on some of the details that you mentioned in your presentations before going to the Q&A session. We have already questions coming in, but Olivia, back to you in China. It is clear that China is the different stage of recovery compared to the other countries. It was the first one to face the pandemic and the first one to emerge out of it. And we are still seeing that even with this situation, the government is active. On one chart, let me show you here the government response indices. It is evident that the government is still sustaining, implementing measures to support the economy. What will be the policy focus in China for the current year? Can you give us a bit more insight?
Thanks, Rodina. Thanks for the question. Yes, sure. Just like other economies in 2020, when facing the pandemic, in order to shore up the economy, China adopted monetary and fiscal policy to combat the shock of the COVID-19 pandemic. But China now in 2021 is in, perhaps it will be still early to say it's post-pandemic, but it's just gradually emerged out of the pandemic. And I think one of the key themes for 2021 for China will be managing risk and growth, which is actually have been quoted in several documents from the government. So China started to for example, China started to stabilize its macro leverage ratio in 2017 in the wake of excessive credit growth. But obviously, the pandemic reversed the downward trend of the macro leverage ratio last year. By the end of 2020, China's total debt hit about 280% of GDP, spiking 20 percentage points from a year earlier. So the default, and also we saw the defaults of state-owned enterprises brought financial risks. We saw a series of corporate bond defaults in November last year, which rattled the credit market with their impact reaping through the end of 2020, resulting in a noticeable contraction of bond financing and massive central bank's liquidity injection to calm down the market. The defaults in the absence of government support belied the assumption that state-owned enterprises in China always have government's backup, especially against the backdrop of weak fiscal positions in 2020. Also, as we discussed previously regarding the unevenness of the recovery, the year 2020 witnessed a great effort of the PBOC, which is China's central bank, to support the small and micro-sized enterprises via various traditional and targeted monetary tools in a bid to boost economic recovery and employment, including deferral of the debt payment. And an executive meeting of State Council in December 2020, an extension of this preferential policy was announced to continue to shore up the weak recovery for the micro, small and medium-sized enterprises. So there are many risks and challenges because of the pandemic, and moving forward into 2021, well, of course, it's very important to maintain stable growth and to continue the growth momentum of the economy. But I think the government will also think carefully about managing those risks and the challenges moving ahead. Back to you, Radina.
We'll keep an eye on the events and the data as usual. Staying on macro level, but this time switching to India, we know, and Ruhini, you have mentioned multiple times in our publications and other webinars, that India was undergoing a demand-led slowdown even prior to the pandemic. Tell us, please, what's the situation now? And again, how is the government going to boost demand?
Thanks, Radina. Yes, I think this has been an issue for quite some time now. And unfortunately, consumer demand still remains in sort of a mixed bag of indicators. So some indicators such as digital payments, automobile sales are showing a growth. But at the same time, vehicle registrations are declining. The consumer confidence has definitely improved, and that has given some amount of, it has restored some amount of confidence with the manufacturing firms as well. But it's still pretty far from the pre-pandemic level. So also this strange phenomena for certain months, some of the indicators are inching upwards and then suddenly they are declining or they are moderating. So it can be attributed to a pent-up demand that had built up during the pandemic, the lockdown. And so it's very difficult to say whether consumer demand is performing well or if it's performing well just now before it moderates again. So core inflation has been sticky around 5.6%, which shows that prices have been rising. But again, because this is an extraordinary year, it could be a result of the supply side disruptions. So here it is crucial for the government to ensure that the supply side disruptions ease out and the prices are moderated. The government has provided many benefits, as I already mentioned, to generate greater employment and give purchasing power to people. As Olivia mentioned, this is something that the Chinese government has also done, that instead of just cash transfers, they are focusing on building up livelihoods and regenerating consumer demand through that channel. But at the same time, there have been almost no particular tax benefits given to the working population in the current budget due to the worsening fiscal balance. So it's a very thin line that the government has decided to tread on and take a risk that of fueling the consumer demand through fueling employment and skill development, things like that. So yeah, it's still difficult to say what the situation will be, but if this is sustained, it will improve. The consumer demand will pick up eventually.
And when the new data for the GDP for the fourth quarter in India gets released, we'll see if this thin line is getting thinner for the government or a bit more stable.
Yes.
Back to Brazil, Adriano, a bit. I would change the topic a bit to the healthcare, because you mentioned in your overview that clearly the mass vaccinations are going to be a real challenge in Brazil. Do you know, are there any changes in the use of public and private healthcare systems actually in Brazil? Any shifts over there?
No, in fact, both the private and the public hospitals are in a very critical situation of infected by the COVID, both systems. In fact, the public systems are more flexible. For example, the public system can adopt some campaign hospitals, but the private systems cannot. So the private system is also in a very critical situation. It's curious, unfortunately, because many people lost their jobs during the pandemic, and many people had health insurance that was provided by the companies. But as many people lose their jobs, the number of people covered by the private health plans decreased in the country. So it had some pressure to the public hospitals, but as these hospitals are more flexible, it was the situation in both systems are the same. Both of them are crowded in some regions of the country, both of them are collapsing. So the elective surgeries had to be postponed because of this, and the number of beds dedicated to the COVID increased in both of the systems.
Thanks, Adriano, for this insight. Staying on a healthcare topic in the medical field, I would like to go back to India now, because the pharmaceutical industry over there is currently booming, actually. Correct, Rukmini?
Yes.
How in this environment will the COVID-19 vaccine exports place India internationally? What's the outlook over there?
So India was already sort of trying to become one of the leading manufacturers of generic drugs, vaccine. Basically, as you rightly said, that the pharmaceutical industry was picking up in India for becoming for international exports. And India was already producing more than 50% of the global vaccine output even before the pandemic. So, and in fact, the Serum Institute of India, which is the producer of the Covishield vaccine, which is the Oxford AstraZeneca, the formula, it is the world's largest vaccine maker. And India is quite capable of becoming a manufacturing hub for low-cost drugs due to the large workforce and the favorable government support that they are receiving, especially in the light of the pandemic. But at the same time, the raw materials, there is very high dependence in China for raw materials. So here there is an opportunity for India to become a manufacturing hub for pharmaceutical drugs, for vaccines. There are 2 vaccines already being rolled out, which is the Covishield and the Covaxin, which is developed by the homegrown brand of Bharat Biotech. There's a third company, Dr. Reddy's, which is seeking approval for producing the Russian vaccine, the Sputnik 5. That will be in March. And so far, like 15 countries have already been supplied the COVID-19 vaccine. And then another 25 countries are already in queue as per the information shared by the Minister of External Affairs. So I think, yes, COVID-19 has placed India on the map, if that's what I can say. And I think there's great potential here for India to grow and become that manufacturing hub that they envisage, and probably even find ways to lower their dependence on China for imports, for the raw material imports or the APIs, which is your active pharmaceutical ingredients. But that is something that that has to be explored, like where it can be sourced from, if India has a capability of doing it internally. So I hope that.
Since you mentioned Rukmini, multiple times the potential for India becoming a vaccination hub, manufacturing hub, what about an export hub? And I ask this question in regard to this self-reliance program and development of homegrown brands.
That is definitely the government's idea, and to lower imports and to maximize the exports. Much like China, India has a very high manpower. The thing that I would say stopping India right now is that the skill development needs to be amped up and quite substantially, and that we see that in the budget for 2022, that the government has put aside these 6 pillars, and one of those 6 pillars is the skill development or the human capital factor. So again, the government is sort of trying to build that build their strengths, I would say, that that would help eventually India to become this export hub, become an alternate to China in many ways, be it pharmaceuticals, be it toys, or it could be a lot of different industries that could benefit.
Definitely. With that, I would like to switch to our Q&A session because we have a bit less than 20 minutes left. Again, I would like to remind our audience that they can submit their questions in writing using the question panel. We already have some questions coming in. And I guess the first one, it is targeted to all of you, asking about the impact of the pandemic to the agricultural sector. Maybe Olivia, would you like to elaborate a bit more on that?
Sure. I think my response can be from 2 angles. First, a major feature of China's economy during the pandemic is the booming of the online retail, the online shopping, the e-commerce activities are like booming in 2020. And agriculture is one of the very dynamic area when people are beginning to buy groceries online, and a lot of really huge e-commerce platforms such as Alibaba and Pinduoduo are competing in this area. So I think moving forward, this is definitely gonna to still be a trend even in the post-pandemic era, with more e-commerce features combined with the agriculture sector. And the second angle would be looking at one of the most important government documents for the agriculture development in China, which is called the central government's #1 document. This document has been devoted to rural issues since 2003. And each year they will set some targets and guidance for the for the development of agriculture in China. This year, the key theme is food security, food safety, food security, and I think they're talking mainly about developing agricultural technologies, which, like for example, focusing on the seed sector, using technology to develop new seed development, as well as the like setting a lot of numerical targets for food production when the pandemic really disrupted the global food trade. Yeah, so that's the two angles for the agriculture development in China.
Thanks. Adriano, over to you in Brazil. Do you have any comment on the agriculture? How many different angles are there in Brazil?
Yes, the agriculture sector in Brazil was very resilient to the pandemic because the Chinese economy recovered very fast when the COVID-19 arrived in Brazil. So when the COVID-19 arrived in Brazil, the Chinese economy was already recovering from the first wave of COVID. So the agricultural sector followed this trend and continued to export to China and some other Asian markets when the domestic economy was highly impacted by the COVID. So the agricultural sector and also the livestock sector had a very positive performance during the pandemic as the commodities, the price of commodities increased in international markets and the Chinese demand remaining robust during the pandemic. So the sector was very resilient in spite of all of the other sectors in the, not all, but some sectors in the country were highly impacted by the pandemic.
Actually, this is a curious side effect of the uneven spread of the pandemic, because starting in Asia, then moving on to Europe and the Americas, the recovery in Asia, the initial recovery helped cushion the shock in Brazil, obviously, in terms of the agriculture, at least. Rohini, would you like to add anything on the agriculture on India?
Yes, well, agriculture is actually a bit of a hot topic right now in India because we have these farm protests going on.
We have a question on that too. We have a question about that.
So basically, the agricultural sector in itself was not highly impacted during the lockdown because it was exempt, especially because the time when the lockdown happened, that's when the reaping of the yield of the crop comes off in the season. I think it's the Rabi crop season, if I'm not wrong. So of course it was exempt, and in fact agriculture even led the way for recovery in the beginning few months after the lockdown was lifted. So and on top of that, the government also introduced a slew of measures for the agricultural sector, agriculture and the allied sector, I would say. So there was this big push towards development of farm gate infrastructure. Then there was the fisheries, horticulture, even like micro food. I'm forgetting the proper term. So all of these, the allied sectors of agriculture would stand to benefit from the stimulus that was rolled out back in May. However, accompanying those, the capital expenditure, there's also these changes in the laws that were introduced, and some of these laws are obviously it has not gone down very well with the agricultural community, the agricultural sector, the farmers especially, and which is why we are seeing a lot of protests right now. And eventually,
let me.
Yeah, sure.
I just wanted to read out the question that we have on this topic. You already addressed some issues, but just to give you the full picture, how long will the farmers' protest last? Who will cave in first, the government or the protesters? If farmers do not return to their lands by March or April harvest, what is the expected impact on food inflation?
Very difficult to say. So for how long they will last, we can't say, because right now the government and the farmers are at a deadlock. While the government is willing to discuss the concerns of the farmers want the government to repeal all of the 3 new laws that have been implemented. There is a lot of debate whether who is right, whether it's the government. Some economists and policymakers agree that the government is the reforms introduced by the governments will be very beneficial in the long term, while there is also this fact that has to be addressed, that the farmers are poor, and a lot of the farmers are, they have only small land holdings, so they do not stand to benefit from the laws that they have passed. Just to give a quick background, the laws basically allow the farmers to sell outside of the APMC markets, which are these state markets where they would sell their produce earlier. And basically abolishment of these APMC markets is something that they are not okay with, because these APMC markets is where they could sell to the government as a last resort in case they fail to get the desired price for their produce. So there is some debate happening whether this marginal the minimum support price is being removed, or the government says it's not being removed. So there's a lot of confusion on that topic. So again, to come back to the question, we don't know who's going to cave in first. It's not a matter of caving in. I think both sides have a good points in their own, and it's a matter of sitting down and discussing things forward. If the farmers do not return to their lands, that is not the case, because the farmers are sort of rolling in and out. So there's a set of farmers who come, and then a set of farmers go back to their lands because the lands need tending to. So there is a chance perhaps for food inflation, but the outlook really does not. There is the inflation outlook is low for now, at least the one that we have from the RBI. So I don't think that
we have to wrap it up.
Yeah. Sorry, go ahead. Yes, please.
Just to make sure that we answer questions on the different regions as well. One for Olivia on China. There is a question on the reasons why the data on COVID-19 in China shows such low effects on the health of the population. I guess this has to do with the very low COVID cases, if I'm correct.
Yes, in case. I remember last year, like during the end, like probably November or something, when there's one new case in Shanghai, because we don't have like local cases for a long time. And I was chatting with my European colleague, and I said, there's a second wave, one new case, and they were like, what are you talking about? There's one case and you're saying it's an outbreak. But in general, I think the containment of the virus in China, those measures are really efficient in contain the pandemic. After the initial outbreak, when there's a lot of mass and when the healthcare system was not ready at that time, but gradually the healthcare system, as well as the society as a whole, just has more experience and more improved capacity to deal with some regional outbreaks. Measures such as like massive scale contact tracing, virus testing, as well as always isolating the patients are key to the success of the containment. Also, in terms of travel policy, China is adopting strict quarantine measures for international travelers. people from neighborhood that have local COVID-19 cases domestically are also restricted or carefully monitored when they travel. I think another important factor is that technologies are put into place to help contain the virus. For example, if you wanted to enter a shopping mall or any indoor spaces, you have to show the health QR code on your phone, which shows your status. If you are have been exposed to the virus in some degree, the health scan code will turn into either yellow or red, and you're not allowed to enter into a indoor space. Even though there are not any new local cases in many cities in China for a while, people are still required to wear masks in public transportation system or in indoor spaces such as hospital or shopping mall or schools. So I think those measures are probably not new knowledge for many people, but together, and if you follow them strictly, the result proved to be successful. But I think the problem is that probably because the system here is just having everything put into together and having people follow it strictly is perhaps hard to achieve in some other economies.
I'm very sorry. I experienced kind of a disruption and lost you for, I guess, 10 seconds. But now you can hear me well, correct?
Yes, I can hear you well.
Okay.
The last part?
First of all, thanks, Olivia. Since we don't have a lot of time, I wanted to ask one question we have to Adriano, and this is rather a policy one. What are the main reforms that may be voted in Congress in Brazil, and what is the effect on them on public finances?
Yes, we had the first reform that may be discussed in the Congress is the public administration reform, which intends to adopt some new paradigms to the public sector in Brazil, like performance evaluation of public employees, and also to review some benefits to them, because to some of them are very excessive and to some of them are not. So the public administration reform will review some expenditures and try to optimize public spending on payroll and other areas. So this reform will stabilize part of the public deficit. And we have also the privatizations, which will sell some state-owned companies, just some of them, to private investors. And there is also the tax reform. The tax reform aims to provide a better tax system in Brazil, which will be easier for companies to pay taxes and reduce uncertainties related to the payment of taxes in Brazil, which is very uncertain. And these reforms will increase competitiveness and also wants to increase productivity in the country. So these are the main reforms.
One last question, because we don't have a lot of time. This is for Rohini on India, and I would like to go just very briefly. Could you discuss the inflation outlook for India in more detail? Additionally, what are some long-term impacts of this monetary policy?
Okay, so as I was actually, that's where I sort of cut off in my last message, that the inflation outlook is not very high, and so the RBI has this accommodative stance, and they have said that they're going to continue with the accommodative stance for as long as it's needed. Now, while this is great news for the economy, because in some ways, as I mentioned in my presentation as well, that the monetary policy of the RBI has been beneficial in providing government with that space to maneuver through in terms of like the fiscal policy, but at the same time we should be cautious. Now there is a lot of talk amongst economists that the last monetary policy, we should start becoming more careful about our inflation projections and not take this very lightly, because there's due to the expansionary fiscal policy, there is a danger of spurring inflation, and it'll be difficult to control it, like if it goes beyond. So I would say that right now it's not a big concern, but the RBI has to be mindful of what's happening in the economy and sort of be on their toes to keep up with any little change, or if there is any trigger for inflation, let's say like if the farm protests continue or something. So the action should be pretty much instant. So yeah, I think that's the main concern.
Thanks, Rohini. We just crossed the 1 hour mark, and so with that, I would like to gradually close our webinar. I would just like to briefly remind our audience about further flagship publications of ISI Emerging Markets Group. Apart from our regular reports, both on EMIS and CEIC, we have published just recently, actually 2 months ago, our annual Foresight magazine. It is available for free download, and on the right is just a reminder on our thematic report on the policy response, which we published last year, and which is the reason why we're doing this recap right now. Thanks to all of you, to our panelists, to our attendees. We will make sure to answer your questions via email, the ones that we didn't manage to answer. You can check out our previous webinars on our website and on YouTube. With that, I would like to say goodbye and have a nice week ahead.
Thank you. Goodbye.